Welcome to Law Easy. My name's Marty Schenkman, and I'm joined for this video clip by Bill Boersma. Welcome, Bill. We're going to address in this clip and a whole series a whole range of very practical, important life insurance planning questions. Life insurance is a cornerstone of many, maybe most, estate and financial plans. We're going to delve into it. The topic for this clip is testing and modeling life insurance. Bill, so I'm looking for life insurance. What is the idea that you have about testing or modeling insurance? Don't I just call a broker and buy the first thing he tells me? That was an obvious no, but let's dig in.
For the record, no.
You want to think about that again?
No, I don't think I have to think about that one, Marty. There's no such thing as sitting down at a computer and putting in an age and a gender and hitting a button and saying, this is what life insurance costs. It doesn't work that way. There are an endless number of permutations, different assumptions, different kind of policies. It's all over the board. So somebody has to get at least some understanding of what's going on in the market, all the different options, before they can have any sense of questioning what's thrown in front of them.
Why don't we throw out just a couple of common scenarios, make a few comments and replies, and then throw out some others that require even more specialized care. So it seems to me on the simplest end, young guy with a family, young person with a family, wife working, husband working, spouse working, you need coverage if, God forbid, somebody dies. You have to replace that income so that the kids have what to eat and can get through school.
Absolutely.
Something like that may be a simple term policy.
Yes, it is.
Now, on a simple term policy, what kind of factors might you even consider?
On term policies, that's the one thing people sometimes feel comfortable spreadsheeting. It's like, well, if you look at the price, it's a quality company. I just buy whatever's cheap. Well, even with term insurance, it can't really work that way. There's a lot of moving parts, or not really moving parts as much as different options within term insurance. Convertibility is a big one.
That's what I was going to say. People make the assumption, I'm going to buy a 20-year term, the kids will be in college, we're good to go. But God forbid they have a health issue, which is not uncommon. Between now and then, they may never get any coverage, and it's over in 20 years.
Yep.
So you're already, even if you're looking at simple term, it's not so simple.
You're absolutely right. And different carriers have all kinds of different features. You know, if you want a 20-year term, one carrier you're not going to be able to get it at a certain age, and another one you are going to. One carrier might not allow you to reduce the death benefit, or split a policy, or do a lot of things that you really might want to do sometime in the future. And if I was a 50-year-old and I was looking for a 20-year term, and one company had one that's convertible for 15 years, stage 65, and one all the way through 70, you also cannot make the assumption that one that's convertible to 70 is more expensive. It may very well be less expensive.
Really?
Oh, very, very niche oriented. And there's a lot of pieces and features you should be looking at before you make that
all right,
decision.
so this is my simple hypothetical. Now, if you're looking at more permanent coverage because somebody has an estate liquidity issue, that's a policy they want to keep in force forever.
Yes. Until
it's collected. What sort of different issues and concerns would be with that? I mean, if the simple one was a term, go for it.
Well, first of all, in the market, you can have people referring to this simply as whole life insurance. But whole life insurance is a specific kind of permanent cash value policy. You've got whole life, you've got universal life, you've got index universal life, you have variable universal life, you have multiple kinds of permanent cash value policies.
So you have more types of policies than we have trusts.
There you go. Probably we may very well. And each one of those has its own permutations inside of it.
So just to maybe give some more broad concepts of what does somebody want to look at in terms of how to test and model. I think you've made the point really clear in a very informative way of what kind of characteristics that people need to look, and it's way beyond just the simple things often assumed. What else should somebody do before they make a commitment in terms of testing or modeling life insurance?
Well, when we talk about testing and modeling, it's really the kinds of insurance that are more affected by real-world markets. The index insurance and the variable insurance is going to be more affected by the markets out there than whole life and universal life. But whole life and universal life are also going to be affected by interest rate markets.
How is whole life affected, as an example?
Well, whole life is dividends, but dividends are a factor of the overhead expenses of a company, the mortality experience of a company, and what they can earn on their money. If all these policies out there have a crediting rate that is at least in part determined by what the company can make on its money, then that's going to affect the long-term performance of a policy. So what's very, very, very important to understand is that anything that's put in front of a consumer, well, in large part, the only guarantees are all those numbers are guaranteed to be wrong. Okay, they're going to be different than what you're looking at on paper because the market, the conditions is going to be different.
If you're modeling a policy, you're going to look at different types of returns, different types of changes, potentially in the cost that the company may charge.
Well, yeah, you first of all, you have to decide how aggressive or conservative am I going to be. Do I want something that I don't have to worry about it? Do I have to manage it? There are kinds that you kind of can't stick in the drawer to an extent, and other kinds have to be managed very, very, very astutely and regularly, even more so than your retirement portfolios.
Any last comments on modeling or testing policies before we wrap up?
I think the last comment on testing and modeling is that knowing what you're looking at on paper is not necessarily accurate. And something that looks very good on paper, when subjected to real-world scenarios and real-world modeling that I can bring to the table, they may fall flat on their face and never pay a death benefit.
Who does somebody go to get this done? Can an attorney that's doing estate planning for a client that's looking at a policy have the background typically to do this? Is it just the broker that someone's gone to that they've been dealing with their whole life? Is it a more specialized agent? What do you recommend?
Well, theoretically, anybody could, but in reality, in practice, it takes somebody who's very, very specialized in this and makes a practice of doing this every single time and brought in for doing these things. So it's not going to replace the attorney, not going to replace an agent, but it's going to complement them.
Okay. Compliments are good. Thank you for joining us. Remember that the video clips are simply for educational purposes. Don't take any action without consulting your advisors. And thank you, Bill, for joining us.
Thank you for inviting me, Marty.